Hey guys, welcome back. So in this video, I'm going to be explaining how I made $116,000 in February. I'm going to explain my strategy step by step from the beginning so you can see how I make trades like this. Let's go. So let's quickly go over the strategy that I used in February. This is the stuff that I do when I sit down on my computer every single day. The first step is the scanner. Now, this is the way that I'm going to be able to find these stocks in the first place. I don't trade the same stocks every single day. I find what stocks I'm going to trade that specific day. So that's the first step. The second step is to look for a chart pattern. Now, I trade the exact same chart pattern every single day because the way I think about it is if you can master one specific chart pattern, then you're going to be good to go. There's no reason for you to sit there and memorize 5 different chart patterns. Just pick one chart pattern that you like, that you understand, that's simple, and just master it. And once you've mastered it, that's it. You don't need to learn anything else. The third step is to buy the stock. Once everything fits my criteria, and we'll talk about my criteria, and I see the chart pattern, I go ahead and I buy the stock. The fourth step is obviously to sell. Now, I don't sell at random points. I always sell at specific points, and we'll get to those points in a second. And the last step, obviously, is to repeat. Consistency is very important in this because not every day is going to be a trade day, and so you have to be very patient. And some days are obviously going to be red days, right? You're not going to have, months and months of no losses. Losses are inevitable. So when they do come, it's very important for you to still have that in your brain that I need to be consistent. I can't FOMO, I can't just give up, I need to keep at it. So this last step is very underrated, but it's very important. Just keep doing it, stick to the patterns, trust the process, and you should be good. So now let's go over the first step. Now, the first thing I do when I sit down on my computer to trade, literally the first step I do, is I open up the gap scanner. Now, this right over here is what we call a gap scanner. The reason I love it so much is because every single day, when you open up the gap scanner, the stocks that you're seeing, everyone else that has the gap scanner open, they're seeing the exact same stocks. Now, if you think about it logically, right, why would a stock go up? A stock would only go up because a lot of people are buying the stock. A stock's not going to go up if 3 people are looking at it. But if 1,000 people, 10,000 people, 100,000 people are looking at the same stock and they all press buy, it's going to go up. So one of the advantages of a gap scanner is that you have all of these people who are looking at the exact same stocks that you're looking at every single morning. Now, another benefit of the gap scanner is this over here, the actual gap. Now, for those of you that don't know what gappers are, pretty much at 9:30 the market officially opens. But before 9:30 we have what's called pre-market. Now, pre-market, what usually happens is a lot of these companies, like the ones you see over here, they start announcing news. So some of them might announce that they've cured some disease that they were really trying to cure. Or another one might say that they have a private placement for billions of dollars. Whatever happens, the stock will go up pre-market. So this is before the market officially opens. And this happens every single day. Stock goes up and up and up and up. And eventually when market opens, that's when I'm going to be interested. And that is exactly the point where on the gap scanner you can see all of these stocks being included. Step number 2, this is going to be some really good stuff, so pay attention. The next thing we have to look at is the chart pattern that we're going to trade. Now, remember when I said that I only trade one chart pattern? It's this one right over here, and it's called the bull flag. This is the one that I've personally mastered. There's many chart patterns out there, head and shoulders, pendants, all this wedges and stuff. I don't like any of those. I just like the bull flag. That's the one that's simple to me. That's the one I understand. You don't need a PhD. And it's very simple. It happens every single day. Now, this is what it looks like in a perfect world. We have 2 candles going up, we have 2 candles going down, and then we have 2 candles going back up again. Now, the reason I like this is because there's logic behind it. You don't need a PhD to understand this. Now, in the real world, it's not going to look that clean. So on the picture on the left, this is what it looks like on a real chart. We can see the stock starts going up, and then it pulls back for a little bit, and then it starts shooting back up. We want to be entering when the pullback is ending and the next leg up is beginning. So we want to be entering on this candle right over here as soon as it breaks the previous candle's high. So the previous candle's high was this level over here. So as soon as this massive green candle breaks this high over here, that's what I want to be entering. That is the breakout level. That is what I want to be entering. And then it squeezes up. So that's the entire idea of a bull flag. Now, the most important thing you have to remember is it needs to be in a trend. You might notice that if a stock is going sideways, it might actually have a bull flag, but that doesn't mean you should buy. You should only be buying in a trending market. That's why you see we have these two massive candles that are going up. We have all these, what are these, like 4 or 5 candles over here that are going up. The reason they're going up is because we're in a trend. So you have to make sure that we're in a trend. Now, if you're using the bull flags that we just talked about, but you're still struggling to string together profitable weeks, I've opened up a few spots on my calendar this week for my mentorships. This is where I take you under my wing and I teach you everything that I know. You get weekly one-on-one progress calls. Every trade you take is reviewed by me and you get direct access to me. So click the first link in the description, fill out the short application, and if you qualify, we'll have a chat this week. The next step, step number 3, is to buy the stock. So a couple of things to remember over here that I have in my brain before I enter these setups. The first thing is you should never, ever, ever FOMO. For the people who don't know what FOMOing is, FOMO stands for fear of missing out. This is effectively when a stock is going up and up and up and you haven't entered, so you just decide to quickly enter. This is one of the worst things you can do because what you're doing is you're letting your emotions take control of your trading. You should always trade like a robot. If a robot sees a stock going up and it doesn't match its criteria, the robot is not going to enter. The robot is only going to enter when it matches its criteria. So do not FOMO into these setups. And that's one of the main reasons I like chart patterns. It's because when you have a chart pattern that you're forced to trade, if you don't see that chart pattern, you don't trade. It's as simple as that. So you can see the stock going up like it did over here, and you just don't trade. Also, another big thing to keep in mind is you should only be trading A+ setups. You should never trade the ones where you're 50% sure, you're not really sure if it's gonna work. You know, you're kind of bored, so you want to trade. That's not the way you should think about this. You should only trade the A+ setups. Another thing is don't hesitate. I know a lot of people, what they do is they see a perfect setup, but they just get nervous. Or last second, they're like, I can't do it. And they hesitate. And the stock ends up going up, and that frustrates them. And when it frustrates them, they end up revenge trading. So you should never be in this constantly negative cycle where one bad trade leads to another, and it's just terrible. So for example, we can see this is one of the actual trades that I took. We see the stock starts going up, and I still haven't entered. Think about it, the stock went from around 80 cents all the way up to $1.25, and I still didn't enter. Why didn't I enter? Because I just didn't like the setups. They were not A quality setups, and I did not want to FOMO into the setup. So I just didn't enter. I kept waiting. I liked this setup over here. We can see that that's the first candle to break the previous one's high. I liked it. I took that setup, started squeezing up and up and up. I added to my position right over here, kept squeezing up and up and up, and I sold right below this resistance over here. Then the stock started going down again, and I saw this setup, which was very similar. I took that same setup, it squeezed, and on the way down, I sold again. So it's very important that you do not FOMO, stick to the setup, which is the bull flag, master it, and you're gonna be good. The next step is obviously to sell. So the main thing you have to keep in mind is you need to keep your losses small. The worst thing you can do to your account is to interrupt the compounding by making massive losses. So ideally what your account should look like is just win after win after win after win after win. That's how it should compound. The worst thing you can do is take a massive loss because it can wipe out weeks of progress. So think of it like this. If you had a lot of wins and everything's going good and you have one massive loss because you FOMO'd, you have to spend another maybe a week, maybe 2 weeks regaining just that loss before you can finally start making more money. This period over here is gonna hurt you so much in the long run. So the best thing you can do is just keep your losses as tiny as humanly possible. And the last thing to do obviously is repeat. Review every single trade that you take, analyze it, literally have a journal, have a notebook, whatever you want, and analyze the trade. What did you do right? What did you do wrong? What can you do better next time? And have these mini lessons, because the only way that you're going to improve is by learning your mistakes and then telling yourself you're not going to do those mistakes again. Even till this day, even after all the money I've made, I still review my trades. Every single day I'm reviewing my trades, mentally telling myself, okay, you know what? My entry could have been better. You know what, my exit could have been better. I should have done this. I could have done this. And so every single day I'm getting a little bit better, even till this day. Now don't forget guys, book a call. It's the first link in description. I have a couple spots open. Make sure to like and subscribe to this video if you guys want to see more videos like this. Thank you so much for making it to the end of this video. I appreciate it. I'll see you guys next time.